BTVI exclusive for you, the man of the moment, the sector of the moment, metals in red hot form. Chaudhary Bilendra Singh, the steel minister, is in conversation with us. Piyush Jain is going to take forward that conversation. Over to you, Piyush.
Mr. Singh, a couple of questions again at present which the industry has. Let's start with the first question here. There has been rise in the exports again from the regions which are covered under FTA, like again Japanese exports, South Korean steel exports again, and those basically are seeing a surge again. In fact, even if I look at the number again, that basically export numbers have increased by more than 10% over the last few months. The industry is slightly concerned about that. What's your own observation? What the government is trying to do in terms of addressing the surging exports from the FTA areas?
We are seized of every kind of development, maybe concerning with the export or the import front, and if there would be any need to see that our industry is not disturbed on this account of dumping and all that, we would certainly see. But at present, I don't think there is much disturbance, there is much worry on the part of the industry as such.
Right, does that imply at present government would not be looking actively in terms of taking out some categories of steel from FTA, and the government at present thinks again it's better to wait and watch?
You see, most of the commerce activities are to be dealt by the Commerce Ministry. But when we get some kind of, proposal or some kind of suggestion from any of the organization of the industry, then naturally we take notice, and then in consultation with the Commerce Ministry, if some steps are to be taken to see that imports are not getting in such a quantity where our trade balance is disturbed, then actually we take steps.
Right, so let me go across to the second category, which is sponge iron again. As you know, sponge iron is also again used for making steel. Now, one of the complaints or one of the concerns coming from the sponge iron producer body is that the prices basically, in terms of steel making body again, the prices are rising very soon. The iron ore prices are moving far higher. If I look at the sponge iron prices, again the domestic prices are 9% up from the June month. If I look at the domestic iron ore lump price, that is up 7% from the end of June month. This is a concern again which is coming from the steel body, is that the prices actually are rising fast, and again that could be detrimental for their margins. So what's the overall assessment in terms of availability of sponge iron, availability of non-coking coal, and the rising price trend?
Sponge iron industry is very important industry for our ministry, and whenever there is a feeling that the ministry has to take some initiative to see that the iron industry should not suffer on any account, maybe pricing, maybe availability of raw material, maybe in the shape of thermal coal, or maybe in shape of iron ore and all that. And for that, I have already announced a year back a committee constituted under the chairmanship of one of the additional secretary of our ministry to see that fluctuation in pricing should not be a disturbing factor as far as small industry is concerned. And because of that, now industry as such, in steel industry, it is a deregulated sector, decontrolled sector. We cannot put conditions on pricing and all that, but because NMDC has been the main producer of raw material iron ore, so there we are finding ways to see that a kind of satisfaction for maybe for a short span of time should be given to the small industry, so that on that account of spurt in the price should not be a disturbing factor for the steel industry, secondary steel industry, especially the sponge iron. The second thing which is very important is we are waiting for a legislation to come through from Parliament of the Transport Ministry where scrap policy is to be discussed. And the scrap policy ultimately, if that legislation comes through, then our ministry would go for scrap policy of India. And that scrap policy, there may be a provision where the vehicles of certain age, maybe 15 years of diesel-driven vehicle and 20 years of petrol-driven vehicle, they should not ply on the road. The moment this kind of legislation comes through, then we would be having at least 7 million ton of scrap available through only this kind of scrap, which is vehicle scrap. So that would also give a great relief to the industry, which is totally now dependent on the import of scrap from countries like Poland, Turkey and all that.
Absolutely, so in turn again that policy will in turn generate a lot of scrap steel, again that will also ensure increase the raw material supply for the industry. So that's something I think the industry will watch for. Another question, I talked a couple of questions in terms of granular or detail here. Now one would be on NCLT, again a broader sort of issue. Some more smaller steel assets again would be in the next list again, which could be going into NCLT. How is the government looking into that? What's the overall assessment at present in terms of resolution in terms of the other smaller assets? How is it looking to you?
I could not get the exact question of yours. Can you make it small?
Sure, sir. There are more steel assets which are actually in the NCLT list, the next sort of progressive list. How is the government looking towards overall the health of the weaker steel assets which are going into the liquidation, or that's the next stage, but mainly NCLT stage?
Okay, the mechanism of liquidation, that is, we have recently introduced more amendments to make it more effective. And if you see the initial results of the liquidation mechanism, results are very encouraging, and even the banks are feeling at ease that this kind of results, if it continues pouring in, then our bank would be in a position to have a relook to the further lending to the industry, and especially our secondary steel industry. Actually, secondary steel, if you consider the entire quantum of debt or the stress loan, mostly you would see it is due to the integrated steel plants. There is hardly 10% of the total NPA of steel industry is with the secondary steel. So I hope that with this kind of new initiative on the part of our government through this mechanism of liquidation, and to see the results which are coming out, I hope now the secondary steel would also start to have the favor of the banks, because what I see is the little is the output of an industry, they are more committed for the repayment, and if this principle is followed, then banks should not have any hesitation to advance loans to the secondary steel.
Okay. Right, sir. that was Mr. Singh, again the steel minister, giving us all the insights. So Deep, again very clearly, as he said, that at present no concerns coming from the Southeast Asian country in terms of exports. Government at present again actually looking very deeply into the starting of the scrappage policy. Perhaps that could be initiating more raw material supply.
Absolutely. In fact, Piyush Taylor, we'll talk about some of the trends here. It is raining exclusives here, right here on Business Television India. And the biggest newsmaker of the day, JSW Steel, included in the Nifty from September 28th is when that change will kick in. We spoke to the management, the only business channel to actually get an opportunity to do that. This is Vinod Noval, the Deputy MD of JSW Steel, talking about pricing, talking about the capacity addition plans, debt, as well as race for Bhushan Power. Here's what they had to tell us.
Whatever iron ore prices as on today, our price is prevailing as for that. Okay. And we don't have any plan for that immediately we have to raise anything. Today we are 18 million and whatever we are discussing this, I explained it, this is as per expansion route only. And if something comes in acquisition, then we are, that will be additional. So partly it is accruals, partly it is going to be dates. Already we have announced it. Matter is in NCLT court and the next date will be on 6th of September and we are depending on the court decision what it comes. If it is in our favor, so definitely we are happy we will operate that plant.
That's JSW Steel for you, Piyush. It's the biggest newsmaker of the day. It has seen a very strong surge in just today's trading session. 400 plus on the counter already. We were speaking to Jatin Damania in the morning. He had a target of 345 and he said it's already beyond our targets. We'll have to see what to do. But the outlook on this continues to remain positive. Most brokerages too on the street have a consensus buy call in the stock, and of course most of those targets have already been met, but either it's the Nifty inclusion or of course the entire euphoria around the metal pack. But JSW Steel continues to be a winner in trade. What are some of the factors that Street is watching out for this stock in particular?
I think three factors mainly. Again, number one, again, steel price seasonally goes up in the months of September and October. Primarily, again, it's very easy to understand monsoon period, lower construction activity in July, August. As you move to September, October, November, the prices of cement, steel, they all start moving higher. So again, for steel stocks, that again is a positive factor. From June till now, the prices of coking coal, those have declined. There's also again the decline in the price of coal again slightly. And also there's a decline in the price of scrap steel. So if you're importing scrap steel, it's now again 8% cheaper versus the June month here. In fact, coking coal is 10% cheaper versus the June month here. So again, those actually are on a declining trend. There's a slight increase in the iron ore price again as a raw material supply. But if you have good control over your captive iron ore mining here, then again margins are accretive for the steel companies. So steel prices, if again they move up 2 to 3%, along with a sort of currency depreciation, that implies there's a good room for steel companies, and again that's positive for the steel companies. Another factor could be again, JSW Steel again has a very strong balance sheet. So again, being in a pole position for acquisition of European assets, Indian assets, it also means again their capacity acquisition plans actually are looking quite fast on track. So perhaps Deep, I think it's more about the fund action, is more about the intention to acquire the assets which at present are looking at a margin uptake and a very strong demand environment along with the improvement in margins. That actually means there's an improvement in terms of the overall balance sheet and earnings growth here.
And that's exactly what Jatin also had to tell us. It has some of the best cost controls in the country. The cost of producing steel is also amongst the lowest in the industry for them, and therefore these synergies are really kicking in for JSW Steel. In fact, let's just hear out from the management once again on some of the metrics of the stock and their plans for the future.
Whatever iron ore prices as on today, our price is prevailing as for that. Okay. And we don't have any plan for that immediately we have to raise anything. Today we are 18 million and whatever we are discussing this, I explained it, this is as per expansion route only. And if something comes in acquisition, then we are, that will be additional. So partly it is accruals, partly it is going to be dates. Already we have announced it. Matter is in NCLT court and the next date will be on 6th of September and we are depending on the court decision what it comes. If it is in our favor, so definitely we are happy we will operate that plant.
Well, that's a very exclusive JSW Steel management right there for you. It's a very strong day of trade for a JSW Steel. In fact, the entire metal pack having a very, very strong day of trade as well. Piyush, a number of factors really playing into this optimism here. There is that expectation that's been fueling the run for the last few days, at least in terms of a price hike on the anvil for these steel companies. Take us through the factors that are really playing into this move we're seeing.
Right, let's combine two factors here. We were just earlier talking about the sort of pricing trends of raw materials. Now, firstly, again, let's look at the domestic price trends from the June month, the end of the first quarter here. The domestic rebar price is already down 5%. The HRC, the hot roll price, that is down 1%. Cold roll prices are down 2%. Now that's actually from the June month, a seasonally weaker July and August month here. Now what's interesting here is that currency has already depreciated roughly 2 to 3% from the June month here. And now if I look at currency depreciation and then if I look global pricing trends, the Asia trends are telling us hot roll is down almost 5% since the end of June month. Cold roll is down almost 4%. When you combine the rupee depreciation factor, and you will find that perhaps there are good chances of actually a good room for the steel companies to increase prices. So number one, again, steel prices, again, there is a good room again where prices could be increased. Number two, coking coal, scrap steel, again, all those prices are down sharply, anywhere between 8 and 10% from the June month, which implies any price increase, again, basically is going to contribute positive to the margins here. Demand is already very strong. Now, also lastly, again, freight rates are up 28% from June month. So the imported steel anyway actually will have to incorporate much higher freight rates, and also again basically the currency depreciation, and this together means the domestic companies, they have a good room to increase prices from September and October month here. So I think together the two, again the companies which have good control over iron ore, captive iron ore, I think they are going to outperform, and that's where Tata Steel has good captive iron ore source. JSW Steel again basically from the recent sort of acquisitions also has good iron ore source again. So these companies will be benefiting, again will be shielded by their own captive iron ore, and that's why steel price hikes, good demand growth, high utilization implies again good sort of margin performance in the third and fourth quarter.
Absolutely. So lots of factors working in for these metal stocks. Pankil Thakkar is also with us. Pankil, first up, let's talk about JSW Steel. Of course, the stock of the day, an 11% plus surge coming in. The stock is now cooled off slightly from there, but still 400 rupees per share right now on the counter. What's the view on this chart?
I feel the rally has been done because it has given a breakout from its trendline resistance, which was at 351. Thereafter, we have seen a very good run up coming in, and I feel that our targets are almost done on the higher side. So from tomorrow, I feel there can be some cool off coming in the stock, and we can see at a little bit of the downside till 390 and 380 on the lower side. So it's a very good short position, making of a short position out here with a stop loss of around 5406 on the higher side for a target of around 380 on the lower side.
Alright, so those are levels to watch on a JSW Steel. At the moment, we're up about 9.5% on that counter. In fact, across the board, seeing strong traction. Look at Tata Steel. We're seeing gains in excess of 1% on this one. And of course, in line with that, we're seeing many other stocks perform. But the management of Tata Steel actually spoke to us. Anand Sen, the president of the steel business at the company, talking to us about their debt reduction plans going ahead. Listen into those comments first.
If the market supports us and we manage our costs efficiently, we will be able to reduce our debt burden as we go forward. All our plants are expected to run at 100% capacity utilization. We are gradually ramping up, and the potential capacity of Bhushan Steel without any major investments is about 5 million tons. So we expect that it should be achieving about 5 million tons over a space of 18 months to 2 years.